And we're live. Guys, I'm only waiting here for Bleeding Crypto to meet me on Zoom. We should be starting shortly. And we're going to... I got the message from him now anyway, so we should be, guys, starting real soon. Be cool if I could play some music here. Let's make sure now. I'm going to make sure, guys, that I have what I need here for you. And make sure that we are... You can see me and you can hear me. Let's go. My monitor is behind the other monitor. John with audio. Just give me 2 seconds, guys. We're going to be live soon with Bleeding Crypto. Hello.
Hi, how are you?
I'm good. Now, we're live already, so...
we are okay. Running late like crazy today.
Don't worry about it. Don't worry about it. I'm just going to make sure my screens are all set as well. And it's looking good. I'm going to make sure as well that you guys can see you. Okay, I think that's good. And I also have the stream from my channel showing up. Let everybody know, guys, anybody that's already logged in and watching, please make sure you send the link as well to this live to your followers. Spread the word. Just a little bit.
Let me go to my Twitter. Follow you. Did you tag me?
I didn't share a tweet yet.
Okay, that's okay. Oh, no, okay, perfect.
Just making sure I have everything. But I'm very excited. Do you know we don't see you the camera off? Is that on purpose?
Oh, I'm sorry. There we go.
Oh, no.
There we go. Sorry.
There you are. I'm very excited, but we won't do it straight away. We'll talk about the market first. But obviously the XRP. I'm so excited because there was a lovely move there on it today. But we're going to catch up on that. So guys, stay tuned. Because obviously we've done something 2 weeks ago. Bleeding Crypto has set out 2 different plans. We're going to go back on them and see how it played out, but that's going to come later. Obviously, what we're going to do first is going to talk about the market, how we're thinking, what we're thinking, how we're feeling, and everybody that's here already as well, either in this chat or in the comments on YouTube, on Twitter, please let us know what charts you'd like to have a look at. Well, tell me, what have you been up to? Did you move on from your 1 minute charts yet?
Yeah, actually, not too much scalping lately. But just been real busy watching the market, I've been diving into the open interest and liquidations rabbit hole to see how all of that stuff kind of unfolds in the market. And it's been really interesting just to look at this software and look at like a high block and look at open interest indicators and just looking and seeing the way the market is reacting wherever new liquidity starts to pop up. It's insane to see how the market is there for a term that I started that I think it's funny that I learned not too long ago called max pain. And it's an actual term. If you go to Google or you look at Investopedia, max pain is an actual term that they use for how market makers basically move the market towards the max pain level to liquidate people, both up and down. And watching that happen before it happens, like looking at the liquidation where they pile up, and then soon after watching how the market just pivots and goes right to those areas has been something that I feel like I've been missing out all these years. I felt like I tapped into a leading indicator, because very often the indicators that we all use, they're not leading. Some are lagging, some are just gives us some insight, but very few, or if any, that I found actually point to the direction to the highest probability. And looking at these events have really opened my eyes to something just incredible to be able to put into my trading plan. And I'm looking forward to when the market starts to pivot either up or down, where that how that indicator is going to hopefully continue to help me find a more clear path to where we may be heading.
So far you've only been doing research on it. You haven't had a chance to implement the actual findings into the charts. No?
Yeah, no, I've been back testing and also following it now, just live, so that I can just learn more from it. I just started doing this maybe about just a few weeks ago, and I've been doing it primarily on BTC, but I started recently doing it on alts as well. And it's been just incredible for both BTC and alts. I'm using a company called High Block Capital. So they gave me a free trial to try out, and they gave me a referral link. And I said, you know what? I don't want to shield the referral link yet until I can see if it really does work and how good it actually works. But now, this morning, as a matter of fact, I put an announcement on my Discord and with my referral link, because every morning I do what I call the morning brief. I get on a call. I record the update to BTC, Ethereum, and some of the alts and the indices as well, and Dixie, and how things are moving and how the market's looking. And I've been referring to High Block quite often. And finally, today I sent out my referral. I haven't posted it on Twitter, which I will. I'll post a referral link on Twitter. But I wanted to understand how it worked and how accurate it was. Because everybody comes to you. They say, oh, we have this great tool. We want you to use it. And a lot of the times it doesn't really work as good as they say, Mm-hmm. But this one here has been so far just amazing.
Just amazing. Oh, I'll be very interested to see, obviously, how... when you have more information for us to share, how...
Yeah, as a matter of fact, I'll cover that a little bit today. I'll cover that a little bit today. I don't have a lot of time today, like we normally do. Okay. But I will squeeze it in. I will definitely squeeze it in and show you what the game plan that I recorded this morning. I'll share that screen, and we'll see how well it works out for the next show that we have. Okay. We'll use that also as a test to see how well this predicted the market movements.
Awesome. Do you want to still share your chart and just give us your thoughts on Bitcoin and
yes,
maybe,
okay, let's do that. Let me go ahead and start with that.
I think this move is a little bit controversial in a way that obviously they hiked the interest rates and the market is pumping. So it's not. I'm
going to talk about that right now.
Yeah,
and I'm going to use a high block. I'm going to use a High Block Capital software to actually back up what I am thinking. Give me a second here. Let me see. Let me get the correct screen. All right. I have different monitors, and I don't know which one it's picking up. I want to make sure it picks up the right one. Let me see if it picks up. If it's this one here. Yes, it's this one here. Okay, perfect. Can you see my screen?
I can see your screen. Perfect.
Okay, great. I'm going to switch to a different tab. Can you see an ADA tab?
Yes, we can.
Okay, perfect. Let me go back to the Bitcoin one. Okay, so this was I'm going to basically just fill you in on my notes from this morning on what I'm looking at using the high block capital. So currently, right now in the 4-hour time frame, when I did the morning brief, we were pretty much right here on resistance, and I was talking about that on the high block capital. Let me pull this up right now. High block capital, we have liquidation levels. At the time that I did the video, the liquidations were at 21,600. This one right here. This was the only one that was there at the time. These popped up shortly afterwards, but this morning I had it right here at 618. So I was talking about this yellow line here is basically, let me move this out of my way. 608. This is where the liquidations, the last liquidations for shorts were. So basically what it does, it aggregates all the longs and shorts, and the max pain theory that I was talking about that I've been learning on basically states that markets will gravitate to the area or to basically liquidate everyone. And on the high block capital, this morning when I did the video, it was 21,608, meaning that by the time it gets to 21,608, it has liquidated the 150 and 25x shorts. I'm sure there's other shorts with lower leverage, but I'm looking on just the higher ones, the ones with a lot of value. And at the time, I based these lines on that. So I am looking for us to come up to 21,608, knock out those liquidation levels, and then come back down and tag these liquidation levels inside of this. Let me move this here inside of this area here. This is where the liquidations to the long liquidations would be. Feel the max pain would be here. So this was. Right now, my thesis that I'm looking for is to move here. However, after I did my video, these started to pop up and we started getting more and more people shorting. So now I have to raise my threshold to 21,016. So let me go ahead and do that now live with you guys. 21,016. And the reason I'm putting this number is because based on those, hold on, give me 1 second. So I think I did this wrong. 22,116, I believe it was. Yeah, 22. Let me go here. Go. So based on this new information, let me get this off of here. We are most likely going to go to this yellow. And I use yellow because that's when I use the heat maps. Yellow is where the intense liquidity is. I'm used to using Trading Light, which is a different heat map software that I use, but I've been using this one much more lately. So I just stay with the yellow to identify. I like sticking, green support, red resistance, and yellow for liquidations. So right now, currently as we stand, what I'm looking for, and this is a continuing back test, how well can that high block capital predict as a leading indicator where we're going? Now, keep one thing in mind, Marta. This number here is the top liquidation here. It doesn't always go to sweep every single liquidation. So we could go a little lower, or we could go a little higher because, as you know, FOMO may kick in. And also we've got to use our own tool set. So typically what I like to look for prior support for our new resistance. So if we make it up to 22,016, there's not a lot of let me see if there's any confluence. Let me take off this study here. Any confluence? There's some confluence here, but you know what? There's much larger confluence at 22,527. So I would be looking at two different areas. I would be looking at 22,527 as a potential top somewhere in this area here. If we do get past the 22, and if we don't quite make it to liquidate every single contract out there, I would say we may get to 21,800. So give or take, obviously this is an ongoing study that I'm doing. And so far we've been hitting them very close to it, a couple of percent below, a couple of percent above. And let me do this. Let me find out what the percent. So yeah, so look, it's 2.28% to the upside. And if we don't quite make it all the way to my liquidation level and we make it here to this prior resistance, it's only 1% off. So a little bit of a leeway you have to give it. Nothing's going to give you an exact dollar amount, but at least it gives you it gives me a good general sense that I can then combine with my own support and resistance, my own confluence, and try to find an area that makes sense to me where it can stop. And if I go to higher time frames, like the daily time frames, I can see a little bit of confluence. The 120 EMA is very close to that area of max pain. Let me look at the weekly, see if there's any EMAs that line up to that. No, nothing on the weekly. Wow, weekly looks really good for Bitcoin. So in my opinion, here's what I think is happening, and here's what I think is going to happen in the near future. Based on, and I'll explain the reasoning behind it. In the near future, I think we're going to go here because of what I explained. However, you made a very good point. We had the FOMC meeting where they did not pivot. So there was a group of people that thought that they were going to lower interest rates to 50 basis point and start pivoting and start easing up. The reporters, I don't know if you watched it live, there was a lot of reporters that kept on insisting in different ways, trying to get Powell to say that he was going to ease up. And I think Powell did a very, very good job in slapping all of those theories down. And as a matter of fact, he went on to say that it's going to be the complete opposite. They're going to raise it even higher than 75 basis points is what they're thinking. And the reason behind that, I think is pretty valid. If they don't do that and inflation gets entrenched, it's much harder to get out of inflation when it's entrenched. And he made a good point that if we over tighten, meaning that if we go to 100 or higher and things get really bad, they have the tools to get us out of it very quickly. Right. So it's kind of like one of those things like, okay, we rather overshoot, under promise and over deliver and be able to get out of it quickly than to not do enough and then have to bear 2 or 3 years of entrenched inflation, because then it's going to become much harder. The trickle effect to that is going to be much harder. So automatically, we all thought, okay, here we go. We're going to be going down to new lows. And as you can see, we did not. We started going up. But to me, it makes sense that we're going up because there's a lot of liquidity up here, even before the FOMC meeting. Look over here. Look at this. These liquidations here are from November 2nd. These are just kept on increasing. And so to me, it makes sense. Before we go down, why would the market makers leave all of this untapped liquidity here? Why wouldn't they move up here, liquidate? That's how they make money. That's exactly how they make by liquidating folks and then heading down to lower prices. So a move to the upside here and knowing the mentality behind these liquidation events and how they like to exercise their max pain makes sense. That to me, this is a temporary move just to knock out those shorts before heading back down.
Awesome.
Could I be wrong? Yeah, I could. But for that to happen, I think I would need to see more levels be taken out, in my opinion. And one of those levels I think would be taking out 22,800 and taking out 25,000, which was the prior swing high from what was this? I think from September, maybe this was. Yeah, from August. So we can take out, let me move this out of my way. Everything's in my way right now. 25,000. Then I can say, okay, you know what? We may be pivoting and we may be going to the upside.
Yeah.
But look at the world events. Look at look at ES. Look at ES. You really think that's going to happen? I saw a post today. I wish I can give them credit. Damn it. I saw a post on Twitter that says, don't make no mistake about it. Bitcoin falls under the technology. It follows under the S&P. And we're very closely correlated. If anybody who follows the broader markets and see the shift the broader markets make and how it affects crypto, they can see that we're very well correlated. So if the FOMC meeting is going to cause a direct effect on the broader markets and bring those broader markets down, because that's the whole reason they're raising interest rates, to bring everything down, to deflate spending and deflate the amount of jobs that are open and basically put us into an area where demand is not so high, so that inflation comes down, then it's reasonable to think that Bitcoin is going to follow that. We all want to believe that Bitcoin is going to decouple. We've been hearing that term since I got into crypto. We've heard that decoupling, but it's not happened yet. Could it happen here? It could, but the likelihood is that it's not yet anyhow, and we're going to be going down with the broader markets.
Very interesting that you're speaking about that high block, because I'm going to share my chart with you, and what I'll show you is the person that I mentioned to you before, Tino, Traders Reality, and his hybrid system. And funny thing is, he uses this very similar system, and the hybrid, when he discovered the heat map, what he actually was using was called Bookmap. So there's just a similar application, obviously, showing similar data with where the liquidity is, where the shorts, when the longs are placed, with the values given. I'm not going to share it for you. I have that application, but anytime I try and share it on my screen, it just doesn't work. Okay. But the funny thing is, the interesting bit is that anytime his hybrid would show the liquidity pools, they were always nearly to the T colorating with the Bookmap print. So let me, let me figure this out. How am I going to do this? So we are now. I should be able to share you my screen, and I'd be interested to see if I go back on my chart, if I see the same levels, what you were just showing and telling us. Share my screen. I think you have to give me the permission.
Yes, I am not sharing anymore, so you should be able, and I gave you co-host permissions.
Awesome.
So you should be good.
I should try this now in a second, guys. Give me a few seconds. But I totally agree. I think, you know, majority were people were okay, let me see. We're waiting for now. Why does it? Okay. Now tell me if you can see my screen.
Yes. Perfect. I can see your screen.
What I want to do as well is, obviously, I'm going to throw us in there as well, because we want to be able to see what you have to say there. And I'm going to show you my Bitcoin chart. Get rid of this for a second. Just a simple chart with just my support and resistance levels. But I'd be interested to see, I have this box already actually filled, and it's showing where the biggest box is. I can't remember, is it based on the 1 hour, or is it on a 4 hour, or the daily? Because usually I use the 1 hour, but you will have to go back a small bit here, and let's check. So obviously the chart looks the same in terms of where it's actually the pivot point of the highest point here of that interest. But this would be where I'd be looking at the 22,500. Before that, 21,396. And another level that you were looking at also was 2116, was it?
Yes. 2216.
2216.
That's the highest liquidation on the map. Excuse me. This morning, let me look real quick here.
I think
yes, 26. Right, currently, that's the highest one right now. That 22,016 is where the highest the last liquidation on the map so far as of right now.
Okay, so this is where I have my cursor right now. It's about 2217 here. Okay, whereas I was assuming a little bit higher. Obviously, it's the very top. this little candle, then I'd be interested to see as well around this level here when it comes up and takes this, because sometimes what happens when you have, like you were explaining there, bleeding crypto, where they why would they go all the way down to that level if if they still have the liquidity to grab higher or lower? Similar to this, I remember when we were going down all the way from the 69,000, and everybody was like, this isn't, we're not pivoting, we're not going, this isn't bear market, we're going to see it was a very intense time anyway. It was very interesting to see. He used to go back on his live streams and look at the heat map, look at the book map, and see exactly where all that money is. And like that, you think, well, if they're already down here, wouldn't that make sense for them to grab this even lower? But then everybody was expecting it, and you saw that pivot point. You saw that I actually went the opposite direction, because and if you look at that heat map and you zoom out and you do it on a large time frame with your weekly, monthly, a lot of money was higher, but the most amount of money was down below. There is still longs open at the highest point, up from even I think 40,000, 50,000, 60,000. But that money, comparing to what we were coming down to and what we've grabbed, it totally, and I swear to God, right now going back in time, you couldn't really go back any higher, because it made no sense, even without any other factors taking into consideration, like economy or whatever. It's all about market. It's all about liquidity. People, market makers, anybody who comes into this market, they're here to make money, and they weren't going to just go and get, I don't know, a couple of billions sitting there. They were going for the hundreds.
Yeah, as a matter of fact, I'm going to share my screen. Let me, if you want to release the screen, I'm going to share something with you. And look at this. This is the software that I use. Here we go. This is a different software that I use, Trading Light. And this shows the high liquidity pools. And we have, the yellow is the most intense. So we've got liquidity pools on at 15,000. We've got them down heavy at 12,500 and at $10,000. So those are massive liquidity pools. And look, interesting to see up on top, we had a liquidity pool here at 29,600. They turned it off and they lowered it. And they brought it up to 29.5, 29.7, 29.5, but it's not, they just barely turned that on. So they do that to basically try to see if they can get the price to go up. Could it go up there? Yeah, it could. It's less likely. These pools have been here for a very, very long time, much greater than these. So for me, these have a lot more effect on the market. And I've been following this particular software for a few years now. And it's been a very powerful tool to find out where those big liquidity pockets are. They don't always come and hit every single one of them, because what will happen is as we gravitate lower, you'll see new ones popping up even lower than that. So you have to have use some sort of, of caution and common sense that, if they open one at 1,000, doesn't mean we're going to go down to 1,000. It's just that the probability becomes a little bit, not the probability so much, but it acts like a magnet. It wants to go where that bulk of the money is. Doesn't always go there, but at least you get an idea of where market makers want to think that value is. They think value is at 15,000. They think value is at 12,000. They think value is at 10,000. And they have massive orders waiting there in case we do get a drop and those orders are picked up, and they'll be able to exercise those limit orders and and start stocking up on Bitcoin. At the end of the day, we don't know where it's going to go. It can go lower than 10,000. It can never reach there, and we hit the 15,000. But there is a lot of value, as you can see, down in this below the $20,000 range that people are with a lot of money. This isn't retail. This isn't me and you putting an order for $2,000-$3,000.
Like
these are
money.
millions of dollars. Yes, exactly. These are institutions, and they're willing to put their money on the line and create these liquidity pools. Absolutely. So I do pay attention to them, but the high block just gives me a more visual micro look at what's going on the day-to-day, on the hour-to-hour. So let me show you an example of something here real quick. Let's pick XRP actually. Let's pick XRP and let's do that, and let's run this. Let's run XRP and let's look at the liquidation levels on XRP and see where they are. Or you know what? I don't think Binance has liquidations running on. Binance doesn't have XRP right now, so nothing's showing up. Nothing on Bybit. Let me see if BitMEX has. There's no liquidations data for this particular ticker. Let me find. Let me do Ethereum on Binance, and let me actually do tier 1, and we'll see if the longs outweigh the short. Look, there is a total of 478 longs compared to short liquidations. So this tells me that we are going higher on Ethereum because we're like 3-to-1 on 2.5, about 2.3 a ratio over shorts, meaning that we want to knock out the liquidations first. Their shorts are not going in, they're there. But we want to knock out we want to go up to knock out the shorts, and then as we go down, we're going to knock out the longs. This tells me that we're going to go down, to knock out. You have to go down to knock out the longs, but before we do that, we have 185 short liquidations still to go. In order to do that, we got to go higher.
Bubbles are showing.
Look at that. Ethereum, the highest liquidation right now is at 1731. 1731 is, do we have any confluence? I'm playing Ethereum at the moment, but I'm playing it to 1789. But let's see here. The liquidation 1731 on the map tells us that the highest liquidations is right in here. So right on this line, let me change this to yellow, is the last liquidation to get knocked out. But again, FOMO can kick in. People can start buying. So I'm going to stick to my TA and utilize the top of this area here as resistance for me to play off of. But I stay mindful that, you know what, between this liquidation here and my target, it's only 3.35%. So completely reasonable to think that we can push up higher into this resistance cluster that we've had here and knock out all the shorts before tackling all of these longs that are outpacing. So these longs that are outpacing tells me that we're going lower. We're definitely going lower because there's a lot of money to liquidate. All of these longs are going to get have a high risk of getting liquidated, and there's too much money. But in the meantime, let's go after the shorts. Let's go after all of this capital that's in here before we drop down lower. And that's how I use the software. And again, I am not an expert on it. I haven't been using it for very long, but from what I've gathered so far and from what I've been, reading it every single day on all the assets that I trade, it's been very, very telling.
I really like it. And I think, obviously, once, let's not forget that this is additional tool Confluence for your trading. It wouldn't be the first thing to go and use when you want to place a trade, because you still want to find your entry and exit points, and just jumping in, based on that, it certainly would take time as well to understand exactly how it works, what it shows, and like that, it's very fluid in terms of movement, and it changes. So basing whatever, your trades and everything, just on that, it wouldn't be advisable. It's certainly a great tool. And I'm really looking forward to seeing how you develop your trading with us, BC. So
Yes.
I'm conscious of your time, of the fact that you were saying you cannot stay long, but
Yes.
I would love,
Yes.
obviously,
Yes.
for you to go back on the XRP and what we
Yep.
talked the last time about
Perfect.
it.
I got it right here. I just opened it up here. So we were anticipating that we were going to see a drop because we had a lot of news coming up and a lot of events coming up that we thought were going to be bearish. And one of those being the FOMC meeting. I wasn't in the pivot camp. The world events were leading to and the numbers coming out of the GDP and the sectors, how everything keeps on going up. I was leaning more towards they were going to keep it at 75 or even raise it. They didn't raise it. They kept it at 75. So I thought for sure that would bring the markets down. So our analysis was if we come down and sweep the lows of Bitcoin, we would come down and hit this line as support. And if we break the June lows and we put in new lows into the $14,000-$15,000 range, that XRP would be here. We are not there yet. It doesn't invalidate this yet because obviously we're moving to the upside, as we talked about, to grab some of that liquidity. And if that is the case, if the high block capital software does prove to be a good indicator for us moving to the upside and we continue to come down, then we will look at these levels here. So I don't quite consider these invalid. So let's look at the current situation of where we're at with XRP. XRP, when we came down from our top, from the very top, 197 high, $1.97, we landed on the 0.786 fib. We had a beautiful bounce. We put in a double top bearish market structure. We came right back down and we completed that bearish market structure right at 706 again. We had a nice move to the upside, a nice, we can call it dead cat bounce, but more than likely this was a liquidity grab. And what do? We put in another bearish double top. I love these M's. These M's is what I look for. This market structure is what I look for in a bear market, opposed to looking for W's like this for reversals. So I can't ignore that there's a beautiful W here as a reversal. So it could break up and we could go higher. However, the fact that we are still we still have not broken out of our resistance. And what I mean by that, guys, is look, 786, support. We broke it here in May, and look what we're doing.
Yeah,
back testing.
Right,
so what we're doing here, all we're doing is just flipping support into resistance now. So could this break higher? Yes, it could break higher. But the likelihood of that, when you take into account all the other factors. As an analyst, guys, when we're analyzing XRP, we can't just analyze the TA and say, okay, yeah, this is a W, this is bullish, we're going to go up. This has a bull flag, we're going to go up. You can't do that. You have to now take into account the number one correlation with an altcoin. What is that? Is going to be Bitcoin. So now we have to think about what Bitcoin is going to do. What are the moves that Bitcoin is doing? Is Bitcoin reversing? Is it continuing on a downtrend? Then when we take that into consideration, we need to take it one step further. What drives Bitcoin? Well, we all can agree that, especially this year, the broader markets are have been driving crypto. How are the broader markets doing? Are they looking like they're going to be reversing, or are they looking like they're going to be coming down some more? And if we believe that it's going to be coming down, what are the factors that's causing the broader markets to go down? Then we look at the events like the FOMC meeting, the CPI, and all of these reports that are coming out bullish, which means it's bearish on the market, because as the Feds are trying to tame inflation, we need to have bad news coming out of those sectors. We need GDP to be going down. We need jobs to be going down, not going up. And if it goes up, that's bad for us, because that means that they're going to tighten. They're going to continue to raise interest rate. They're going to try to bring down the market. So it has a trickle effect on everything. If it brings down the market, brings down S&P, brings down Bitcoin, brings down XRP. So there's a lot of things that you need to factor in when you do analysis, guys. It just can't be a bullish market structure to fit your bias, and I'm going to go all in because this is going to do a 300%. You could do that, but more than likely you're going to be holding for a very long time. Rather play it safe. Think of the different correlations. Be realistic. Try to remove your bullish or bearish bias on whatever it may be on any particular coin, not just XRP, and see what the likelihood is. Right now, I don't see anything bullish that would want to make me take a position. I know there's going to be people out there they're going to say, "Hey, BC, what would make you take a position?" It's very easy. We break above 786. We back test this. We flip this back into support. I look left and I look at Bitcoin. How's Bitcoin doing? Did Bitcoin flip 2,500? Yes, it did. Okay. How's the S&P looking? Does the S&P look like it hit the bottom and it's starting to put bullish market structures on the higher time frames? Yes. Okay. You know what? I'm going to take a position on XRP. That should be the train of thought you have, guys. You shouldn't just look at one altcoin and think this is the one that's good. This market structure is going to tell me whether it's going to go up or it's going to go down. There's too many factors involved, in my opinion. Did that make sense, Marta?
Absolutely, 100%. Obviously, if we were in a confirmed bull market, this would be
this is beautiful.
This would be beautiful. You'd be just waiting for a retest of this level, and let's go, right?
Yes, absolutely. But look at the major EMAs that we have above it. We have the 200 EMA, the 50 EMA, and the 100 EMA above the price action. That's very, very bearish. On top of that, we have a massive support cluster at 786 that's acting as confirmed resistance. Absolutely, so there is nothing bullish about this chart until we at least, bare minimum, flip that back into support.
Yeah, absolutely agree.
And look at volume. Look at the diminishing volume on the weekly. So that does not look good. Does not look good at all.
So what's bumping the price, right? It's
the rest of the market, like Bitcoin is, because Bitcoin's moving. Everything else, all the algos kick in, and it bumps everything up. I mean, obviously, some coins are moving up much quicker. We had a move with BAN. That went up like 153% yesterday. There's always going to be those types of events, guys. In my opinion, I don't know what you think, Marta, but I think a lot of those are liquidity grabs and a way to trap people, because I've seen that happen. I've seen that fire off on coins before we dropped. As a matter of fact, let's use XRP, Marta, since we're here, as an example. Look what happened. Look what happened before Bitcoin dropped from $6,000 to $3,000 back in 2008. XRP put in 187% candle. 187% candle, just 1, 2, 3, 4, 5, 6, 7, 8 weeks before we dropped another 50% on Bitcoin. This put in a 200% candle. Look at BAND. BAND put 153% candle yesterday. This one put 187%. We've got Doge did above 100%. So we've got a lot of coins that are popping, and that doesn't mean that we're reversing. Remember, guys, altcoins do not drive the market. Altcoins are just a separate vehicle for us to give us the opportunity to make money, but the true driver is going to be Bitcoin. If Bitcoin is putting 100% moves, then I'm going to be paying attention.
Then we're going, if an altcoin's,
if an altcoin's doing it, it doesn't hold a lot of weight, in my opinion.
Yeah, it certainly does feel uncertain still. I wouldn't totally start buying everything right now until we have some more confidence in the market and into the reversal. It does look like a liquidity grab, and I've been saying this to all the guys that know me, whoever is in my Telegram group, anybody on my timeline, watching my tweets as well. I've been saying, pay yourself, guys. I even shared, I think, few rules. Because I got back from my from my Twitter jail. I was finally let out today. And the first thing I said was, seeing how market was pumping the last couple of days, pay yourself. Couple of rules. I said, guys, don't, and it's fantastic to see those flashcards when you take a screenshot of your winning trade, and you see some people flex this amazing, 200, 500% higher. They still mean nothing until they've actually closed the position, and until then, it's like imaginary money. It's literally like you're living in fantasy,
Absolutely.
la la land.
Absolutely.
It's nothing. It's just, so.
And just because we think that the market's going down, Marta, it doesn't mean we can't play it. You and I continue to continue to trade, and even though we think in our mind, okay, the market's going to come down and cool down, but there's still opportunity. There's always opportunity. So as long as you can identify the opportunity, and you can weigh your risk and your position size, knowing that, hey, you know what, if knowing that if I feel like it's going to go down, I don't want to put a lot of money into a play, but I want to make money, so I'm going to put some positions in, and some are going to work out, and some are not going to work out.
Yeah, but just be cautious. And in general, right now, I mean, it's brilliant to see volatility, and it's great to move away from 1 minute charting and 1 minute trading, and be actually able to, get into a trade based on a 1 hour chart or a 4 hour, and get that money. But pay yourself, guys. I'm going to just probably real quick have a look. I don't know how much more time we've left here. You see, we're at nearly an hour shortly. No, we don't really There's the one chart request, but I'm going to leave it until I'm going to cover this, guys, on my Telegram and my Twitter, because this is this isn't, I don't think it's even on TradingView, but I did enter a trade today, and I promised some of the guys that I can show them why I left the trade. So maybe I can just really quickly explain that scalp.
There we go.
Again, just let me figure this out, because guys, this is actually not too bad, I have to say, with how I figured out how to work this. No, I need to share my screen first. There I am, thinking I have it all figured out. Just because, guys, I wanted to show you what I feel sometimes, BC, and maybe you don't agree with me, but I feel that people think trading, watching people on Twitter or any social media or any sort of YouTube, whatever, when they see those flashcards with massive gains, it really affects a mind of a person who is new to trading, has been seeing this for a long time, and think it's so easy. I agree that trading is actually the easiest, hardest way of making money, with the emphasis at the hardest. It's so easy to do it when it goes your way. But the hard part is walking away when you see it's not playing out and being okay with it. I feel people are adamant that, okay, something is moving, I have a setup, it has to play out, and they stay in the trade still thinking, you know what, I'll keep adding to my position, I keep sticking to my bias because I had a good setup. I think everybody else is making money around, I will be the one who's going to make it right now as well. And it is it traps you to the point where you are unable to either see that you're wrong or understand that things have changed, because maybe you weren't wrong, you were right, but there was a shift. So today I entered this trade, but I knew this already made couple of moves. As you can see, guys, it had already pumped from here to here, and I'll show you what it was. But I was just keeping an eye on it, and I was liking the pattern. Let's just even go from around here where it had a retest now. That would have been a fabulous 15% move, right? So that's one. And then it had another pump here. That's another 15%. And I thought, oh, do you know what? There's still more live left to this, because I zoomed out a small bit. I went over with my Tino Trader's Reality. You go left and you look. What do you see? The price is already here at this point, right? This is a 4-hour chart. You see this big, massive red candle here. That is just asking to be leveled. That it's just, you know, it looks. We should pump all the way up to here, and that would have been my probably target one for loading off. And I brought it a little bit lower, just to about 35.5, when I just thought, okay, let's just push it maybe. And I'll zoom out a small bit in a minute again, and I'll show you these. This is where my second target would have been, probably around 3. Sorry, my cursor is after freezing. 3.7. You could really pick on that candle here as well. Sometimes happens, but this is very hard to catch, and there mightn't be enough liquidity for you to, even when you have an order placed up that high, that it would actually end up hitting, because then it's just a sharp whip of rejection. So again, back to being safe, right? These were my two targets, 3.5, 3.7, and I thought, okay, and this is why you can see, again, you can see this trade here. I have it mapped out, 3.7, a little bit higher, but you see as well on the 4-hour, this is the 200 EMA here, about 3.644, M pivot 4, and then M pivot 5, which is the highest usually point of the range at 3.8. Being safe, again, I think it would have been a good target for a nice scalp. I love scalps. And I entered in around, I was a little bit higher here when I entered, and was hoping for some pullback. Another 15% move. So if you are lucky, okay, and if you know how to play it, you catch 30, 45% with whatever leverage. You could have even caught 450, whichever. I don't really usually go higher than 20. 15 is my comfortable level. 20 when I feel pure degen. But what I wanted to say was, this was playing out. I'm going to go back to 1 hour and real quick explain, because I exited that trade. I left it, and I think I only made about 40% on the trade, and I was seeing it in around those levels here, just here, where you would. What you are observing here, right? We had that retest here. This was actually a very interesting point here as well. Reversal point here. This is a pivot point. Sorry, this was a daily open actually up here. We retested this with this candle, a 50 EMA on a 1 hour. The reason why I exited was because of seeing this high here. And I just thought, you know what? It's getting too close for comfort for me. This is starting to look to me like a double top. I didn't have time and the focus and concentration around this trade. And I said, I'm out. I'd rather grab that 40%, whatever, 48% at that point, rather than see it go back all the way back to my entry point and have nothing, right? And I do believe that it is a level that many traders are missing. They would still stick to their bias and be like, you know what? It's up here. I'm looking at this potentially going at least to yesterday's high, right? Why not? We have that reversal. We still have that a lot of money sitting out there, and greed takes over. So what I wanted to just basically
that's agreed.
greed. And I mean, I feel it all the time because obviously it's so amazing where you see candles like this printing and they're pumping and pumping and pumping, and you're like, wow, how lucky am I, right? This is a quick scalp. I see those percentages quickly increasing and my money going higher and higher. But to get to a point where you've made a decent chunk, where you see like, I was taking a chance with this. Like I said, this would have been a third, and it may as well. Do you know what? From this point, it may as well just go and pump higher and go up to those levels. Like I said, grab that liquidity I was showing you here. But the point I was going to say is, if you know you're pushing it, like I said, 1, 2 would have been the third one. What are the chances of this actually making that move in this condition? Bitcoin was like, doing something uncertain as well. If I have 40, 50, 60% already made, I'm richer by that 40, 50, 60%. This is actually my second trade. I didn't share the first one. I did it. I didn't have time. But I just like to concentrate on those psychological moments, and those moments where you have entered a trade, because the thrill, this is it, that thrill, that moment where you are seeing that money multiply, when you're getting it right, when you feel like this rush of the wave takes over. That's why I love doing this, and this is what. But to get to a level where you are either exiting with a smaller gain and you're okay with it, or you're leaving the trade without either entering or at a smaller loss, knowing that this isn't your fault, this isn't at all dependent on you, you have matured as a trader. What do you think?
I like the statement that you made in the beginning that crypto is the hardest, easiest thing. And the only thing that I would disagree with is the definition. It is the hardest, easiest, because it's the hardest way to lose money. It's like, the hardest way to make money and the easiest way to lose money. Yeah. Because it's a tough job. It's a tough job.
The guys here have livened up in the chat and they're laughing at me. Guys, I just want to make sure everybody knows this is 0% alcohol here. Because they're saying Marta gives best advice when wasted. Next time I'm driving.
But I do agree with you, Marta. I think it's always important to take profit in this market. If you get 40% profit and you're trying to, and you want that greed and go, I'm with you. I cut a lot of trades when I'm in good profit, a lot sooner than if I see the shred of weakness, I'm out. I'm taking my profit, because you have to put it this way. If you take your profit and it does go up to it goes up to your original target, so what? You made money, and guess what? And guess what you do? You wait for the next setup. Exactly. It doesn't mean that's the only setup you're ever going to have. Yeah, you take the next trade. You can short it. If it reached your target, more than likely that was the top of the target. If you were that confident with your analysis and it worked out, exactly. Now you can short. If you're a shorter, you can short it, and you can wait for the next setup to go long if there's a setup to go long, or continue to short it. So never be. I always tell my Discord members, never be ashamed when you pull profit. Profit is profit.
Look, I really think I love what we're doing here, because a lot of people that are joining us have, very valid questions and very basic questions. And I like I said, I really like talking about the psychology of trading. There isn't enough emphasis about it, on it, really, in general, where, like I said, people get sucked into trades, basically thinking it is going to go my way. People revenge trade. They also get to be in this sort of mind frame where everybody is sharing gains, and why am I not there? I need to get there as well. I need to achieve this, and are unable to understand. It has to be hard as well for many people right now when the market has not been volatile enough to practice your trades, especially people that are starting, or actually if anybody that has been here long enough and are just getting bored of this, so this has to be this moment where, there's going to be a lot of FOMO. There's going to be a lot of people thinking we're reversing and they're going to get trapped. So get into that mind, like get yourself prepared for reversal, but keep paying yourself, even if that reversal is not to happen. Because you are way better off grabbing the money along the way in a laddering effect. Even, like, this is actually another point I want to make. Because I was in another trade and I've made overall...
I'm going to have to get going pretty soon, Marta.
We'll be wrapping up.
Okay.
When you are in a trade and you see that it goes over 100% on a scalp trade, don't wait for it to do 200 or 300 or whatever until it reaches that last target you've set yourself for before you pay yourself. Pay yourself on the way up. Grab that 25% of that trade. Grab another 25% of that trade. I know it looks great if you think, oh my God, I'm going to make X amount of money when it reaches that top target. Guys, greed will absolutely destroy you. 40% is better than 0 or -5 or -10 or being liquidated. Just because Bleeding Crypto has to run today, we will try and do another live, hopefully in 2 weeks' time. I'm conscious of the fact that we are November already. It's going to be Christmas soon. We're going to have to try and plan them out. Actually, we might have to do it maybe next week if you're around, because I have to go to a baby shower in 2 weeks.
Sure. Yeah, let's do that.
So we could, we will set it for next week, guys. And hopefully we'll have a bit of a longer stream then. We would love to take more chart requests and keep asking us questions. What you would like us to cover? What would you like us to talk about? Bleeding Crypto has amazing...
Or maybe some tools. Maybe some tools that they want us to cover. I'll be more than happy to cover some of the tools that I use in my trading and in my analysis. Would love to do a session on that.
Awesome. Yeah, there's loads of ideas we both have. We want to do this all for you guys, and we just love sharing it with you. It's great and brilliant to see chat hopping as well. So guys, you're most welcome. Come back next week. And we're going to get this really, really good for you, with benefit to everybody that's watching and participating in those lives. Thank you very much, Bleeding Crypto.
You're very welcome. Thank you, Marta.
Thanks, guys, and we'll talk soon. Bye.